Everyone tells you to go big when you move into commercial real estate. They say buy the plaza, get the high-ticket tenants, build a kingdom. They're wrong. For a beginner, a strip mall isn't an asset. It's a liability waiting to happen. But there is a secret middle ground, a mixed-use duplex. That's where the real goldmine is. Look, we've analyzed hundreds of portfolios. We've seen experienced residential investors lose everything trying to jump from a single-family rental to a 10-unit retail center overnight. The math looks great on paper, but the reality? Vacancies, complex CAM charges, and commercial tenant lawsuits can wipe you out. Today, I'm showing you why that big jump is a trap. We're breaking down the exact reasons why a mixed-use property is the perfect bridge for scaling your portfolio. You'll learn how to capture commercial-level returns while maintaining residential-level risk. By the end of this video, you'll know exactly how to scale your wealth without gambling your entire net worth. You've seen the gurus. They tell you that residential is for amateurs, that the real money is in commercial. So you start looking at strip malls, a few storefronts, steady NNN leases. It sounds like passive income heaven. But here is the part they don't mention in the 60-second TikTok. Commercial real estate isn't just bigger residential. It's a completely different beast. Imagine your anchor tenant, the one paying 40% of your mortgage, suddenly goes bankrupt. Now you have a massive hole in your cash flow. Suddenly, the passive income becomes a full-time job. You're chasing tenants. You're arguing over common area maintenance fees. You're dealing with zoning laws that would make a lawyer cry. And then comes the death spiral. One store closes. Foot traffic drops. The store next door sees the decline and decides not to renew. Before you know it, your goldmine is a ghost town. One vacancy in a duplex. You lose a few $100. It's a nuisance. One vacancy in a strip mall. You're bleeding thousands every single month. You didn't buy an asset. You bought a high-stress liability that requires a professional management team just to survive a bad quarter. For a beginner, jumping straight into a strip mall isn't scaling. It's gambling with your entire net worth. So if the strip mall is a trap, what's the escape hatch? Stop thinking bigger is better. The secret isn't a 10-unit retail center. It's the mixed-use duplex. Here is the reality. Most beginners go for strip malls because they want that big league feel. But big league comes with big league risks. In a small strip mall, one vacancy is a catastrophe. If you have 4 units and one goes dark, you just lost 25% of your revenue instantly. Then there are the CAM charges, common area maintenance. You're suddenly responsible for parking lot stripes, landscaping, and roof leaks, while your remaining tenants complain about the rent. It's a management nightmare for someone just starting out. Now, let's look at the mixed-use duplex. You have a commercial space on the ground floor and a residential unit above. You've effectively split your risk. If the business downstairs fails, the residential rent keeps the lights on. You aren't betting your entire portfolio on the survival of a local nail salon. But the real magic, the financing. Strip malls require hard commercial loans. We're talking shorter terms, higher rates, and brutal balloon payments. A small mixed-use property often opens doors to more flexible financing options. It's the perfect bridge between residential stability and commercial upside. Management is also a different beast. With a duplex, you aren't negotiating complex NNN leases with corporate franchises. You're dealing with a local business owner and a residential tenant. This is where your systems matter. You cannot scale this if you're chasing rent checks via mail. You need a dedicated property management software to automate the boring stuff so you can focus on finding the next deal. Think of the mixed-use duplex as your commercial training wheels. You use these properties to learn the language of commercial real estate. You learn how to vet a business tenant. You learn how to handle zoning. You build a track record with your lenders. Once you've stabilized 3 or 4 of these, you'll have the cash flow and the experience to tackle that strip mall without the risk of going bankrupt. You aren't avoiding the big leagues. You're just making sure you actually survive long enough to play in them. If you're looking to organize your leads for these specific types of assets, a commercial real estate CRM is a game changer. Stop using spreadsheets. Start using a system that alerts you the moment a mixed-use gem hits the market. Now, scaling from residential to mixed-use isn't just about the property. It's about the system. If you're still using spreadsheets, you're losing money. I use a specific commercial CRM and property management software to automate my tenant screening and rent collection. It turns a 10-hour work week into 2. The result? My first mixed-use transition increased my monthly cash flow by 40% without adding more stress. That's the secret to real passive income. Systems, not just assets. If you want the exact tools I use to manage my portfolio and the platforms I use to find private money lenders, check the links in the description. Stop guessing with your capital. Hit that subscribe button and turn on notifications so you don't miss our next deep dive into high-yield assets. Let's build that wealth.